If I'm honest with you, I could probably be far wealthier today if I had avoided just one careless decision in my early years. That isn't regret speaking, it's math. Compounding magnifies both your wisdom and your stupidity. Every good decision grows quietly in your favor. Every bad one compounds just as relentlessly against you. And here's an uncomfortable truth most people avoid. By the time you reach 40, the broad shape of your life is already visible. Your career path is largely defined. Your family situation has taken form. Your habits, financial, emotional, and psychological, are deeply ingrained. And your appetite for reckless risk has likely faded, whether you admit it or not. You can still take risks, but they are no longer experimenting. They are bets with real consequences. This is the moment when most people make their worst financial mistakes. Why? Because 40 is the age of urgency, disguised as opportunity. People suddenly feel behind. They look at peers who seem richer, faster, flashier, and panic. They think they must catch up. They rush into speculative stocks, crypto fads, real estate bubbles, or leverage-heavy ventures. They confuse speed with progress. But here's the reality. At 40, your game is no longer growth at all costs. Your real game is stability with steady compounding. Survival matters more than brilliance. I grew up watching people lose everything not because they were dumb, but because they borrowed too much, trusted the wrong crowd, and believed prosperity would last forever. Every generation repeats the same pattern. The faces change, the technology changes, the stupidity does not. So here's my central investment principle for people over 40. Play defense first, offense second. Your 20s and early 30s were your offensive years. Experimentation, career shifts, risky startups, bold investments, and learning through failure. By 40, you no longer have the luxury of rebuilding from catastrophic mistakes. Losing half your wealth at 25 is painful, but recoverable. Losing half your wealth at 45 can permanently alter your future. Yet most people do the opposite of what they should. Instead of stabilizing, they gamble. Instead of simplifying, they complicate. Instead of protecting capital, they chase returns. I once knew a brilliant engineer, top university, high income, respected in his field. At 42, he felt behind his peers. He sold his diversified portfolio and poured everything into a trendy tech startup ecosystem. By 47, his wealth was cut in half. Not because he was stupid, but because he was impatient. If he had simply invested in stable, boring businesses, healthcare, consumer staples, utilities, he would have been comfortably wealthy by 60. Not spectacularly rich, just secure. And sometimes secure is better than spectacular. People over 40 often forget something fundamental. The real enemy is not underperformance. It's catastrophe. A single reckless decision can undo decades of careful saving. Now let's talk about envy, the silent destroyer of wealth. More people go broke from envy than from recessions, not because they couldn't earn money, but because they couldn't stand watching others earn more. Envy pushes people into reckless moves. Your neighbor buys a luxury car. Suddenly your old one feels embarrassing. Your colleague brags about a stock that tripled. Suddenly your steady investments feel boring. That's when disaster begins. I've seen it countless times. A man I knew invested sensibly for years. Slow, steady, reliable returns. Then his friends made big money in oil stocks. He felt humiliated. He leveraged himself to join the party. When oil crashed, his portfolio collapsed. His friends recovered. He never did. At 40 plus, envy is lethal. You don't have the same runway to recover. The best investors I've known didn't care what others were doing. They cared about staying solvent, sleeping well at night, and letting compounding do its work quietly. Here's a simple rule. If your strategy requires you to outsmart everyone else, you will lose. If your strategy requires you to outlast everyone else, you will win. Now let me tell you about one of my own mistakes, because failures teach more than victories. Years ago, I invested in a high-quality company that looked dull but fundamentally strong. The numbers were solid, management was competent, and the business was durable. The stock rose modestly, and I sold. Why? Because I got impatient. I wanted quicker returns. Years later, that same company multiplied in value many times over. If I had simply held, my net worth would have been dramatically higher. The mistake wasn't the company. The mistake was me. Most investors make the same error. They sell winners too early and cling to losers too long. It's human nature. We crave certainty when prices rise, so we lock in gains too soon. We fear admitting mistakes when prices fall, so we hold bad assets too long. The correct behavior is the opposite. Hold your winners, cut your losers. And at 40 plus, this discipline matters even more. You don't have decades to fix reckless decisions anymore. One poorly timed sale or speculative gamble can shrink your wealth permanently. The financial world constantly screams at you to act. News, pundits, trends, crises, predictions, most of it is noise. Great businesses survive chaos. Great investors survive by doing nothing. Your job is not to react to every headline, but to avoid sabotaging yourself. Now let's talk about confidence. Overconfidence ruins more investors than recessions. People think sounding certain equals being right. It doesn't. The smartest move you can make at 40 is learning to say, I don't know. Most people would rather be confidently wrong than quietly uncertain. I once saw a successful lawyer bet heavily against a foreign currency because he read a few articles and felt sure. He wiped out much of his retirement savings. If he had simply admitted ignorance and invested boringly, he would have been fine. Here's the most valuable skill you can develop after 40, the courage to say, I don't understand this, so I'll stay out. That alone will save you more money than any investment strategy. Now let's shift to mindset. There is a massive difference between thinking like an employee and thinking like an owner. Most people optimize for career status, titles, promotions, prestige, but titles don't compound. Ownership does. Real wealth comes from assets that make money whether you show up or not. Stocks that pay dividends, real estate that generates rent, businesses that operate without your constant effort. If at 40 you still rely entirely on your paycheck, you are not investing. You are just extending your career. Eventually, your energy will decline. Your health may falter. Your ability to work endlessly will fade. Your assets must carry you forward. This is the age to shift from earn more to own more. Now let's talk about history, because memory protects you from disaster. I've seen economic collapse. I've seen markets crash. I've seen fortunes evaporate overnight. Good times never last forever. Prosperity is not permanent. It is cyclical. That's why debt is so dangerous. Debt makes you fragile. With no debt, you can survive a crisis. With debt, a crisis destroys you. At 40 plus, leverage is not ambition. It is arrogance. Now let me summarize everything in 3 simple principles that have guided my life. Avoid debt, avoid drama, avoid reckless people, not glamorous, not flashy, but effective. Wealth is built more by what you avoid than by what you chase. Finally, Bo, here's the blunt truth most people ignore. If you spend more than you earn, nothing else matters. Not investing tips, not stock picks, not financial advisors. Arithmetic doesn't care about your feelings. I've seen high-income people die broke because they couldn't control spending. And I've seen modest earners retire comfortably because they lived simply and invested consistently. At 40 plus, your financial future depends far more on behavior than intelligence. So here's your real question. When you are 70, do you want to impress people or be free? Do you want flashy toys or financial independence? The choice is obvious. The execution is rare. And here is your final rule. You don't need brilliance after 40. You need discipline. You don't need luck. You need patience. You don't need speed. You need endurance. If you keep things simple, avoid debt, ignore envy, and invest steadily in solid businesses, compounding will take care of the rest. And remember, the world doesn't reward the smartest. It rewards those who avoid stupidity the longest.